When people talk about the 2008 financial crisis, the blame almost always falls on greedy Wall Street bankers, subprime mortgages, and reckless risk-taking by firms like Lehman Brothers and AIG. The mainstream narrative tells you that big banks and financial institutions created an economic bomb that exploded and wrecked the global economy. But what if I told you that two government-backed entities played just as big, if not a bigger, role in this disaster? What if I told you that the very institutions designed to stabilize the housing market were actually fueling its destruction? The 2008 crash wasn't just a failure of Wall Street. It was also a catastrophic failure of Fannie Mae and Freddie Mac, two institutions that most people barely understand. These two organizations held over $5 trillion in mortgage obligations, much of it tied to toxic loans that collapsed under their own weight. Yet, their role in the crisis is often buried beneath the chaos of collapsing investment banks and stock market crashes. This is the hidden story of Fannie Mae and Freddie Mac, the one that nobody talks about. To understand how these two institutions helped fuel the biggest financial crisis in modern history, we need to go back to why they exist in the first place. Fannie Mae, Federal National Mortgage Association, was created in 1938 during the Great Depression to stabilize the mortgage market. It bought mortgages from banks, which allowed banks to lend more money to home buyers. Freddie Mac, Federal Home Loan Mortgage Corporation, was created in 1970 to compete with Fannie Mac and further expand homeownership. In 1981, they also started selling mortgage-backed securities. In theory, this was a great system. Banks got more liquidity, investors got safe assets backed by home loans, and more Americans could afford homes. Before the 2000s, Fannie and Freddie primarily dealt in traditional, low-risk mortgages where borrowers had good credit and had made a solid down payment. But by the early 2000s, this system had started to change into something dangerous. As housing prices soared in the early 2000s, private banks and lenders started issuing riskier mortgages to more borrowers, including subprime loans to people with bad credit. Investment banks were making billions by securitizing these bad loans and selling them as mortgage-backed securities, MBS, and collateralized debt obligations, CDOs, products. Fannie and Freddie saw that Wall Street was making enormous profits off high-risk loans, and they wanted a piece of the action. So, despite their historical reputation as safe institutions, Fannie Mae and Freddie Mac began buying up these toxic mortgages and guaranteeing them. By 2008, they were holding trillions of dollars worth of risky debt. But here's where it gets even more dangerous. Unlike private banks, Fannie and Freddie were government-sponsored enterprises, which meant that investors assumed the government would bail them out if things went wrong. This gave them an unfair advantage over private lenders and encouraged even riskier behavior. There was another factor of political pressure driving this madness. For years, both Republican and Democratic administrations pushed for increased homeownership. They wanted Fannie and Freddie to relax their lending standards and approve loans for people who, under normal circumstances, wouldn't qualify for a mortgage. Government policies encouraged this reckless lending with new regulations. In simple terms, Fannie and Freddie were pressured to take on more risk, and they did. This reckless expansion helped inflate the housing bubble even further, as more people took out loans they couldn't afford, believing housing prices would never fall. By 2007, reality started catching up. Housing prices stopped rising. Subprime borrowers began defaulting on their mortgages. The entire financial system was built on the assumption that home prices would always go up. But when they started falling, the house of cards collapsed. Fannie and Freddie had over $5 trillion in mortgage obligations, with a huge chunk tied to subprime and risky loans. As defaults surged, their balance sheets started bleeding. Investors panicked, and their stock prices crashed. Despite all this, regulators and politicians refused to acknowledge the danger even when reports showed that Fannie and Freddie were massively undercapitalized. Then, in September 2008, reality hit. The government had no choice but to take control of both institutions, placing them into conservatorship under the Federal Housing Finance Agency, FHFA. Fannie Mae and Freddie Mac not only sold the MBS, but also promised investors that they would receive payments even if some borrowers defaulted on their mortgages. This guarantee made MBS appear safer than those sold by private banks like Lehman Brothers. This was a big problem because when the housing market collapsed, they still had to pay the investors because of their guarantees. Eventually, the losses were so huge that the government had to bail them out in 2008 with $187 billion in taxpayer money. To this day, Fannie and Freddie are still under government control, but very few people talk about how close they came to destroying the global economy. Wall Street gets all the blame for 2008, but without Fannie and Freddie, the crisis might never have reached such catastrophic levels. If you want to learn more about the 2008 crisis and the Big Short movie, please check out this playlist. I've covered all the topics about the 2008 crisis in this playlist.